Okay, good day. I have with me Dr. Roelof Botha. He's the financial advisor for the Optimum Financial Services Group. And we're talking fuel prices. It was expected that the fuel prices next week will decline by quite a big amount, but in the meantime, the oil price have surged to $102 per barrel. That changed the situation a little bit, although still a big decline in the price that awaits us. Roelof?
Yes, thank you. Things were looking really good when West Texas Intermediate oil price at one stage was uh, on the verge of dipping below $90 a barrel, which was really good news. But unfortunately, most crude prices have started increasing again, and it's mainly because of fears surrounding the energy situation in Eastern Europe and Europe in general, because their winter is approaching, and some of those countries burn a hell of a lot of oil to generate electricity and especially for heat in the winter. The big concern is not necessarily whether they're going to be cold or not. They will be cold, I think, but it's to keep their factories on the go. So they are huge concerns. And what happens in a situation like this, of course, is that you buy. If you think things are going to become scarce, you buy that. I think if we can think back of COVID, for some reason people were buying toilet paper, a hell of a lot of the stuff, and there was never a problem with that. But when you think a commodity is going to become scarce, the trend is to buy a lot of the stuff, and if you do that, of course, then you have almost an artificial lack of supply, which drives up the price. Economics is not rocket science. It's if I'd been smarter, I would have become an engineer probably. But fortunately, the rand has been fairly resilient. It recovered very nicely. Weekend again, and just for the listeners' sake, please remember that if somebody tells you the rand is rubbish, that's absolute nonsense. When the rand takes a hit, I can almost guarantee you that all the emerging market currencies, most of them also take a hit. So it's not a question of rand weakness. It's a question of dollar strength. Back to the fuel price, I think there's still an excellent chance of a 2 rand a litre reduction in diesel and petrol. It's not guaranteed. There's still a couple of days left. But at this point in time, it looks as if that can be the measure of the decline, which is great news. Looking into the future, looking forward, the oil price remains a bit of a concern. I do believe that the rand will continue to strengthen because inflation may have already peaked in the United States and in some other countries, not in the UK for some reason, and in South Africa probably with a bit of luck another month or two. And what's very important to realize is that the reason for the spike in inflation globally is not necessarily the oil price. It's the transport costs. The Statista Freight Rate Index increased by 800% between the third quarter of 2019 and the third quarter of last year to more than to about $10,300 for a 40-foot container. That was unheard of. This is unprecedented. Since then, it's come down to under $7,000 per 40-foot container. This is fantastic news. So what I'm trying to say is that as we move into the future, the way the inflation rate is calculated, you just add every month's incremental increase. And as we move into the future, those months in which this spike occurred are going to start falling away. So inflation can, in fact, the rate of inflation drop dramatically in the next couple of months. So let's hold thumbs that we may have another. If I were a gambler, I'd say we'll have another petrol price decrease in October.
Roelof, we saw that the oil price slumping, going down, and then OPEC announces that they want to curtail the production, and all of a sudden it shoots up again. Is that a strategy by OPEC to regulate the price?
Yes, absolutely. It's a horrible strategy as far as I'm concerned. But the good news is that even the combined members of OPEC cannot compete. with the United States and Russia. They are the number one and number two oil producers in the world. And what has been happening in the United States, unfortunately, is ever since Joe Biden became president, is that there's been a bit of and this is good in principle, a bit of an emphasis on the environmental issues, but I do believe that they are ramping up um, their fracking operations. And all of the environmental impact assessments have pointed in that country, in most countries, have pointed to the fact that this is not necessarily harmful to the environment. And of course, if the war in Ukraine can just end, Russia is the second largest oil producer in the world. They will need to restart their economy almost after the war, because they are taking a huge hit because of the plethora of sanctions against them. And they're going to flood the market with oil. So the minute that war ends, one can see, a very sharp decline will be in the offing for the oil price. In the interim, we have to live with these contrasting forces. There are many large oil producers that are not members of OPEC, and they are taking advantage, obviously, of the higher price. As I said earlier, the big dilemma is the European winter that is approaching, and the Russian aggression, and the tactics that they are using, which are unpredictable, totally unpredictable.
The question now is what will happen to the oil price um, uh, is, as this is an artificial increase. Does this mean that it will come down again as the pattern was seen before?
Yes, absolutely. If you look at the volatility of the oil price, and you go back to the previous era when the oil price also spiked, it's in fact currently almost at the same level. So I want to get back to the major reason for this problem we've got with inflation, and that is shipping freight rates. That was a really big reason.
Rudolf, and then just regarding food prices, because this is sort of connected, and there were talks about a decline in food prices as well. The latest development, how does that affect the possibility of lower food prices?
Yes, oil and obviously energy prices, the fuel price, the diesel price, it all feeds into your supply chains, and especially as far as agriculture is concerned, but also the agricultural food prices was also as a result of temporary shortages. Once again, countries, for instance, banning exports of food prices. Now, this doesn't happen every day. It happens when you have a pandemic followed by a war in Europe. These are unnatural events, totally unnatural events. So one can expect this type of volatility in the world when this happens. If you have a look at South Africa's producer price index, and this is not much different from the rest of the world, you'll see that the food price itself in the basket, the food prices are not a major problem. Yes, there are some items that are in double-digit territory, but not all of them. And you go down that list of the producer price index, and then you'll see the prices of energy. It's unbelievable. In South Africa's latest producer price index, the price of fuel, I think on a year-on-year basis, it's a 60% increase. So that remains the major culprit in this inflation spike which we are battling with, not only South Africa. By the way, just to comfort our viewers, South Africa's inflation rate is considerably lower than many of our trading partners, which is, I suppose, something to be grateful for, but it will still increase for at least another month or two.